Greetings and welcome to the American Institute of Architects Economic Update for the second quarter of 2015. I'm Ned Kramer, Editor-in-Chief of Architect Magazine, the journal of the American Institute of Architects, and I'm joined by Kermit Baker, Chief Economist for the American Institute of Architects. Hello, Kermit.
Good to be back with you again, Ned.
Yes. Time number 5 for us.
Time number 5. We're getting better.
We're getting better, and hopefully the economy is too.
It's trying. It's trying very hard.
You have good news for us?
Well, we had another rocky first quarter of the year. We're kind of getting used to those. That was the same problem we had a year ago. As our viewers can see, job growth during the first quarter was a little bit below where it was for the year. You know, at this stage in the cycle, we'd like to get about 250,000 jobs a month total. That's 3 million. That's a nice pace. We'd like to get about 25,000 or so jobs a month in the construction sector. We met both of those targets for 2014. Not so much for the first quarter of 2015, but again, probably a challenging winter season was largely at fault, and it looks like we're going to get back onto a nice growth pace as we continue through the year.
So not a lot of construction in Boston this year so far.
We had a few days off. Yeah, we had a few days where we couldn't get to the job site.
So what are some of the variables, the kind of wild cards that we're looking at?
Well, you know, I think a big issue that we've been trying to sort out is energy costs, oil prices. So oil prices fell from over $100 a barrel in the middle of 2014 down to their current level of about $50 a barrel. So a dramatic decline. You know, there's some good things coming from that. That's going to keep inflation down. It's going to help consumer spending. All folks, when they pull up to the pump now, spend less than they used to. So those are all good things. But it does have a few negative implications too. Oil and gas extraction were a big piece of the construction market. In fact, according to the government numbers, almost 10% of spending last year was on the power sector, which includes oil and gas exploration. So we just lost a good chunk of that. Secondly, there's some major economies across the country, Texas markets and surrounding states, Oklahoma, Louisiana, up through Colorado, in the north central states, North and South Dakota, western Pennsylvania, where we see the fracking and other sorts of things, that are going to see a lot less economic activity, a lot less construction activity because of weakness, and that's in their economic base quite fundamentally.
We've been seeing so much boom culture in the Dakotas, and it sounds like that might be tapering off a little. Yeah,
I think so. You know, while prices keep at this level, you know, unlikely they will, and when they come back up, I think we'll see that that pick back up again. But I think that is a concern. Another issue, as our viewers can see, is on the list is interest rates. We've been really sheltered from interest rates hikes, so we now have 10-year Treasury bills at about 2%, almost near historical lows. We've got short-term rates that are effectively 0%. Safe to bet that's not going to continue, and it's not going to. We're going to start seeing some movement, in all likelihood, later this year. On the short term, the Fed is likely to move middle of the year, third quarter, something like that. They've already curtailed their bond buying program, so I think it's safe to assume that long-term rates are going to drift back up again. That's a concern. I mean, it's really helped the economy, and one thing you see is values for commercial properties that with interest rates where they are, it's really pumped some of those up, and once they go back up again, it'll start to bring those back down. That might cut back a little bit of construction activity that we've been seeing. And then the third one, I think, when I talk to people in the industry, number one on their list is labor issues. Yeah. We've lost probably about 1.5 million workers from the construction industry off of a base of what was 7.5% prior to the downturn, 7.5 million, I'm sorry. And a lot of those are probably not coming back to the industry. They've moved on to other industries, they've retired, they've left the labor force. So we're going to have a struggle to get those workers back. As a result, the construction workforce has gotten a lot older. It's less reliant on immigrant labor than it traditionally has. We don't have a lot of women in the construction workforce. So as we build it back, we have to look for some I think some new demographics to get back to the pool of labor we need to support this level of construction.
So is there a skill transfer concern?
Absolutely, yeah, absolutely. I think that we've just closed down a lot of our training and apprenticeship programs, and we need to rebuild those, and that doesn't happen overnight. And until that happens, I think we're going to have some labor issues in the industry.
Interesting. So now tell me about growth. I know there's a bright side in there somewhere. And my sense is, as you can see in the graph, that non-residential has been doing relatively well.
We had a good year last year. Government numbers indicate that non-residential spending on buildings was up about 6%. When we were sitting here a year ago, I think we thought it would have been more like 4 or 5%. So that came up better than expected, even in the face of a weak first quarter last year. So I think we did okay, but we continue to see the differences in the sectors. So the private building sector, commercial activity, manufacturing activity was all up at a double-digit pace.
Yeah. Very,
very healthy growth. Biggest part of the market is the institutional side. Government, nonprofit, buildings that have some sort of public purpose. And they didn't do so well last year. In fact, they really saw, as a category, no growth last year. So we've got half the market that has not, at least as of the end of 2014, has not begun to recover yet.
And healthcare really took a big hit. Is that a function of the Affordable Care Act uncertainty?
Yeah, education and healthcare are the two pieces we care about the most. They account for about 2/3 of the total. And as you noted, healthcare was down in the mid-single-digit range. And I think a lot of it was just concern over where is the Affordable Care Act going? Will it be fully implemented? Are we going to need to provide new facilities for this newly insured population? Or is it going to go away? There were a lot of challenges last year to it. I think the sense now is that it's probably here to stay, that we're going to have to provide the facilities for these newly insured households, and we're going to need more facilities to do that. So I think the sense is that we should see a reasonably good recovery in that sector this year.
So the concerns about a Republican-controlled Congress making aggressive plays against the Affordable Care Act, that seems to have...
I think so. I'm guessing this is a bit beyond my area of knowledge, Ned, but I think the politics of that are probably going to, kind of status quo. That I'm guessing we're not going to see major changes there.
How are firms themselves feeling the effects of the economy right now? What do billings look like, for instance? Well,
our architecture billings index was reasonably weak in the first quarter. We saw an average for the quarter of a little bit over 50. I think it was 50.7 for those 3 months.
Just a little bit of growth.
Just a little bit of growth. Again, kind of, the Groundhog Day, again, from first quarter last year, where we saw billings average just about 50. So I think we are seeing a weak first quarter. For the year, our billings index averaged in excess of 52. So I think we'll see a very similar pattern to 2014. Relatively weak first quarter, pretty healthy growth second, third, fourth quarter. I think a lot of firms, a lot of architecture firms are talking about the backlogs they've built up. Part of it is a growing economy, but part of it is sort of work that they just couldn't get to in the first quarter. So they're feeling very comfortable about things, and they talk about very healthy workloads, about very healthy backlogs, but not so much healthy billings, at least in the first quarter. Just they weren't able to proceed on those projects.
So we're hoping institutional is going to bounce back, I'm presuming. Is there any sense of what the kind of overall trends are from institutional to commercial? And
Well, that's obviously critical. I mean, as we talked about, not having growth on the institutional side is going to limit the overall growth that we can expect to see on the construction sector. The good news is that institutional billings, as measured by our Architecture Billings Index, have been very healthy. They picked up, they turned positive for the first time this cycle last June. So we got 7 months of 2014, the 3 months of 2015 are again healthy. So institutional is really one of our strongest sectors now. After going from decline for several years, now it's bounced back very nicely and is matching at least what we're seeing on the commercial side.
So that speaks to a pretty healthy pipeline, even though there hasn't been a lot of construction activity, or less construction activity than we'd like in the institutional arena.
Yeah, well, absolutely, and our own metrics suggest that you see a pickup in billings on the institutional side. 9 to 12 months later, you see a pickup of construction activity. So now 10 straight months of billings decline, just about ready to. We would expect to see an upturn in institutional construction activity. So over the next couple months, we'll be monitoring that. But I think clearly they've been architecture firms have been turning out designs for institutional buildings. So we should see that construction activity pick up pretty soon.
Great. And then what about revenues? How are firms doing from the cash perspective?
Dug a fairly deep hole for themselves, and we saw as our viewers can see, a $14 billion decline in revenue from the peak of the market to the trough. That turns out to be just about 20% decline. The good news is that we've gained a lot of that back. They're now up $11 billion off of the trough, so we've gained back over 3/4 of what we lost. Nice to be a little bit better, but I think firms are feeling more comfortable, and certainly more comfortable with the direction that billings are going. I think they're moving at a nice pace. They're feeling more comfortable about the situation. We hear from architecture firms, much like we hear from the broader construction industry. It's hard to get good staff these days. That's hard.
A nice problem.
It's compared to what we've been through. It's a very nice problem to have. So I think it's nice to know there's a stronger market out there for people looking for work.
So that should make for a pretty upbeat mood at a convention next month in Atlanta.
Good point. I think that's exactly right. I think by the time we get down to Atlanta for our annual convention, we will have seen more growth in activity. I think we're going to have a good solid second quarter this year, and then a good solid second half of the year. So I think we're going to see some smiles on faces down there. Yes.
Thanks so much, Kermit. It's been informative as always.
Good to be here, Ned.
That's it for the second quarter 2015 economic update. We look forward to seeing you in the next quarter.